The dollar is going to fall extremely, forcefully, cautions unmistakable Yale financial analyst. Stephen Roach, Yale University senior individual and previous Morgan Stanley Asia Chairman, has an admonition for U.S. dollar bulls. The noticeable market analyst says that the time of the U.S. buck might be reaching a conclusion and is estimating a 35% decay soon in the U.S. cash against its significant adversaries, referring to increments in the country's shortage and diminishing reserve funds. The speaker said during CNBC's Exchanging Nation on Monday that the ascent of China and the decoupling of the U.S. from its exchange accomplices is making way for an emotional debilitating of the U.S. cash in the following barely any years that is probably going to end the matchless quality of the financial unit as the world save money. The dollar is going to fall extremely, forcefully, he told the Business Organize. Mr. Roach's remarks follow likewise themed commentary that he wrote in Bloomberg a week ago, in which he explicitly pronounced that the time of the U.S. dollar's over-the-top benefit as the world's essential hold cash is reaching a conclusion. In that article, the financial expert said that the U.S. economy is as of now worried by the effect of the COVID-19 pandemic and proposed that the downturn that has held the U.S. in February in the midst of the general well-being emergency will just intensify the dollar's troubles. The fundmaster said that the remainder of the world is having genuine questions about the once generally acknowledged assumption of American exceptionalism. On Monday, Mr. Roach said that the U.S.'s monetary deficiency, as the administration exhausts trillions of dollars with an end goal to relieve the damage from COVID-19, may just exacerbate the situation for bucks. Then, Mr. Roach says that China's cash, the yuan, may gather expanding bid from speculators as Beijing experiences a period of auxiliary changes that could move the nation's assembling overwhelming economy to one concentrated more on administrations and one with more noteworthy customer-drove development. Stephen Roach puts forth the defense that albeit a more fragile dollar, once in a while preferred by President Donald Trump, would profit U.S. sends out temporarily. It would demonstrate progressively hazardous over the more drawn-out term. One proportion of the buck, the ICE US dollar index, has been debilitating in the course of recent days, down about 4%, however is up somewhat on the year, rising 0.1%, as indicated by FactSet information. The record quantifies the buck against a bushel of 6 adversary monetary forms, including the euro, the pound and the yen. A more fragile dollar has suggestions for resources and the securities exchange, including the Dow Jones with most obligations designated in dollars. What's more, a greater part of cross-outskirt financing and worldwide exchange are led in dollars. Stresses over the worldwide economy have customarily empowered purchasing of dollars alongside different safe houses in view of the impression of the U.S. as a steady economy and cash. Mr. Roach, be that as it may, says that developing shortfalls will in the end change that recognition and convey a gut punch to the greenback.